My wife insists that AON is the stock to buy right now. She said we can be rich buying the stock. I don't buy hype. So I'm going to do some study and not follow blindly. But how do I start? The point here is to be rich. Maybe I need to study how much the stock can make me in 10 years' time. Let's do this by estimate how much is the company profit in 10 years' time. Since everyone in finance is telling me to use EBITDA, I'm going to use EBITDA. For those who don't know, you can understand it as a type of profit. I will extract the data from stockanalysis.com. Think about it. What do you think this number lands? Will the EBITDA be higher or lower? So in 10 years' time, based on the last 10 years, annual growth rate of the company, 11.5%, and assume the growth is slowing down year over year. AON EBITDA will be $12 billion in 2034. Right now, people is buying the stock around 19 times the EBITDA. It means if a company now profit $1 a year, people will buy it with $19. In last 10 years, people usually buy the AON stock with 19 times the EBITDA. As I personally think dividend received is my profit too. I will be adding up the dividend I am getting in 10 years' time. So, to get the final price of the stock, I will be adding up 19 times the EBITDA plus the dividend. And the stock price is expected to be $1.2K. Right now, the stock price worth $350, meaning I will earn 2.4 times my investment. Putting in $1,000, we'll earn around $2.4K in 10 years' time. Sounds like a bargain. But the finance people also says best way of investment is to put in trust fund. To be rich, I would need to beat those giant S&P and QQQ. Similarly, I extracted the data from stockanalysis.com. Using S&P 500 stock growth in last 10 years, I am assuming 10 years later it will be 2.2K, giving myself 2.5 times profit. And QQQ will be giving me 3.3 times profit. Now, in comparison, buying AON stock sounds like a bad idea, lower than QQQ. But hold up. After some research, they're saying cash is king. Do you think their cash performance can be better than the QQQ? All right then, I'm using the same method, estimating the free cash flow 10 years later. The stock price will end up to be $1.3K, meaning putting in $1,000 will be earning around $2.6K in 10 years' time. Sounds like a bad idea, lower than QQQ. I personally like Dividend. Let's use the same method on dividend gain. The stock price will end up to be $1.1K, meaning putting in $1,000 will be earning around $2.2K in 10 years' time. Sounds like a bad idea, lower than QQQ. Let's average all three methods, taking all consideration, and see how it goes. The stock price will end up to be $1.2K, meaning putting in $1,000 will be earning around $2.9K in 10 years' time. Sounds like a bad idea. Buying AON can get us 2.9K, and QQQ is getting us 3.3K in profit. Seems like buying QQQ is a better idea. Okay, the number seems terrible, but why? Let's study more about their business to understand more. Let's quickly break down the general information and the segment analysis. Starting from the general information. In short, so what is AON doing? They're big in risk, and they focus on people problems. Think cyber threats or climate change volatility. They use massive amounts of data and smart analytics. That is their big advantage. Their future? It's called AON United. It means putting all that data together, giving clients the best solutions. It's about making complex decisions easier. Okay, I don't think that's enough. I know their story now. But how did AON earn their money? We can understand the business's earnings by examining its revenue by segment to determine the source of revenue. 47% of revenue by segment is from commercial risk solutions. 20% is from health solutions. 16% is from reinsurance solutions. 11% is from wealth and retirement solutions, and 7% is from data and analytic services. Next, the compound annual growth rate, CAGR, of the respective revenue by segment helps to understand if these segments are growing well, or if there is any outlier, dip, or growth. The CAGR is 19% for commercial risk solutions, which is above benchmark, 26% for health solutions, which is above benchmark, 14% for reinsurance solutions, which is above benchmark, 2% for wealth and retirement solutions, which is below benchmark. In conclusion, the data clearly indicates that commercial risk solutions, health solutions, and reinsurance solutions are the primary engines of both revenue generation and growth, while the performance of wealth and retirement solutions suggests an area requiring strategic attention or further investigation to boost future expansion. So, now we know the potential return and what the business is about. Is that enough to make an informed decision? That is not quite right. You see, buying a stock without checking the financials is like marrying a partner based only on their looks. It's gambling, plain and simple. If you watched this far, you're serious about investing, and we need to run the numbers. To do that quickly, I developed a 20-do checklist that pulls insights from the balance sheet, cash flow, and income statement. Running these 20-do checks manually is tedious, so I use the fast download feature at stockanalysis.com to pull everything to Excel for calculation. This is the fastest way to get your insights. You can access the data and my recommended tools through the link below. Use the discount code StockSnack. From the numbers of the financial statement, we can tell that for AON, the combined financial score is bad, 9 metrics with good scoring out of 22 metrics. For balance sheet, we are checking 7 metrics. Out of the 7, only 2 metrics got good score. For income statement, we are checking 9 metrics. Out of the 9, we got 5 metrics with good score. And lastly, for cash flow, we are checking 6 metrics. Out of the 6, only 2 metrics got good score. In conclusion, AON displays a complex financial profile characterized by high debt and strong shareholder efficiency, high ROE, perfect gross margins, but is constrained by high selling costs, poor retained earnings growth, shaky earnings quality, cash flow less than profit, and an unsustainable rate of returning capital to shareholders. To go through the detailed financial statement analysis, check out the other video in my channel. Now, it is time to make the conclusion. So, is what my wife said correct? Well, I lost money buying AON stock. By the profit-wise, buying QQQ or S&P 500 is having more potential than AON. At the same time, it does not have good financial health too, potentially not worth your time. Now, the analysis is complete. Once again, if you needed tools for your investment strategy, give a try to stockanalysis.com. They provided sufficient free tools for you to work around. If you ever want an upgrade, promo code is StockSnack. Institutional grade data with less than $1 a day. One day, one stock. See you again at StockSnack.